Bitcoin to $200,000, Ethereum to $10,000. Find out why experts are saying this could be the biggest crypto bull run yet. Links to resources below. In the latest video from Altcoin Daily, Aaron predicts Ethereum could hit $6,000 this cycle, potentially reaching $10,000 if Bitcoin surpasses $200,000. He notes substantial Ethereum accumulation by whales, including a recent $50 million purchase alongside BlackRock's similar investment. Aaron points to Fidelity's data suggesting Ethereum is currently undervalued and highlights growing institutional interest, citing BlackRock, Fidelity, and even the White House's digital asset director as examples. He believes Ethereum's dominance in the tokenization and real-world asset space positions it well for future growth, with Boston Consulting Group predicting a $16.1 trillion market by 2030. He anticipates a significant Ethereum bull market, especially in the latter half of 2025, contingent upon favorable regulatory developments and the Ethereum community's continued progress. He also mentions a Bitcoin price prediction of $150,000 to $180,000 for 2025 by Bitcoin IRA's founder. While the institutional interest in Ethereum is certainly a positive sign, predicting such specific price targets feels a bit like throwing darts. The crypto market is notoriously volatile, and while the analysis presented sounds reasonable, relying on Bitcoin's performance to boost Ethereum feels risky. Boston Consulting Group's projection is encouraging, but it remains a projection. I think it's smart to be cautiously optimistic about Ethereum's potential, but I wouldn't bet the farm on these exact numbers. Regulations, broader market conditions, and technological advancements will all play a big role in determining Ethereum's actual price trajectory. In the latest video from Crypto Casey, she explains how GoBabyTrade, an AI-powered trading bot, can be used to dollar-cost average DCA into Bitcoin and other cryptocurrencies. This bot, priced at $1,166 yearly with a $1,000 discount for a 3-year license, uses Level 2 market data information on pending buy and sell orders, giving retail investors an institutional edge. Unlike basic trading bots, GoBabyTrade is set it and forget it, requiring no active trading decisions. It also boasts AI trained on 25 years of data, compared to most bots' few years. Casey demonstrates setting up a DCA strategy for Bitcoin within the platform, highlighting its ability to buy at optimal price points. She emphasizes that the bot only has permission to buy and sell, not move funds. Coinbase is a recommended exchange due to its favorable fee structure with Coinbase One membership. She recommends hardware wallets from Tangent Wallet and Ledger. While the concept of an AI-driven trading bot leveraging Level 2 data is intriguing, it's essential to approach such tools with healthy skepticism. The promise of passive income in the volatile crypto market can be alluring, but no system guarantees profits. Relying entirely on a bot without understanding the underlying market dynamics can be risky. It's crucial to research and understand the bot's algorithm, the developer's track record, and the limitations of AI in predicting market movements. Furthermore, the video's emphasis on price volatility as a profit generator for altcoins raises concerns. Volatility also translates to higher risk of losses. While GoBabyTrade's automated DCA strategy for Bitcoin might be a more stable approach, potential users should independently verify the claims made in the video and consult with a financial advisor before investing. The long-term track record of GoBabyTrade, which is relatively new, remains to be seen. In the latest video from DataDash, Paul discusses Bitcoin's potential bearish reversal pattern similar to the one seen before its drop from $110,000. He says this could lead to a shift from Bitcoin to altcoins, triggering an altcoin rally. He notes Bitcoin's recent bounce from $74,000 to $80,000 and its approach to the $96,700 resistance level, which is also the golden pocket and point of control. While leaning bullish, he cautions that rejection at this level could lead to a drop. The video analyzes Bitcoin dominance, noting a potential bearish harmonic pattern, the shark, which could benefit altcoins. Paul reviews specific altcoins, highlighting XRP's range, Solana's, and once bullish harmonic patterns, SUI's rally, PTE's recent bounce, and FET's surge. He advises caution against chasing pumped assets and discusses the SPY ETF reclaiming a critical level, indicating potential upside for traditional markets. If Bitcoin breaks above $97,000, he predicts it could reach $106,000. Paul's analysis provides a balanced perspective on the current market dynamics. His caution about the $96,700 resistance level for Bitcoin is well-founded, as this area has historically presented challenges. The potential shift towards altcoins is an interesting observation, particularly given the recent performance of some altcoins like SUI and FET. However, his advice against chasing pumped assets is crucial, as the cryptocurrency market is notoriously volatile. Linking Bitcoin's performance to the SPY ETF recovery suggests a potential correlation between crypto and traditional markets, which needs further observation. While his prediction of Bitcoin reaching $106,000 is optimistic, it's contingent on breaking the key resistance level, making it a crucial point to watch in the coming days. This blended approach of technical analysis with market sentiment makes it useful for both seasoned traders and newcomers. In the latest video from CryptoWindy, she discusses the recent delay of both Dogecoin and XRP spot ETFs by the SEC. While this might seem like bad news, Wendy points out that it's a delay, not a denial, suggesting potential approvals are on the horizon. She emphasizes the SEC's current process of reviewing over 70 crypto spot ETF applications, including Franklin Templeton's XRP spot ETF, delayed until June 17th, and Bitwise Invest's Doge ETF, delayed until June 15th. Referencing similar delays with other ETFs, she suggests approvals might start rolling in around Q3 2025, possibly even October. This, Wendy believes, will likely ignite an altcoin season, especially considering the current cycle's unique behavior compared to the last. She urges viewers to see the delay as an opportunity to accumulate and research potential investments. While a delay can be frustrating, especially for those eagerly awaiting the XRP and Dogecoin ETF approvals, I think CryptoWindy's optimism is somewhat warranted. The sheer number of applications under review suggests a shift toward broader acceptance of crypto within regulatory bodies. This cautious approach, while slow, could ultimately build a more stable and sustainable crypto market in the long run. However, it's crucial to consider the potential downside. The extended timeline could also create a period of uncertainty and price volatility. Furthermore, regulatory changes could still impact the final decisions on these ETFs. It's essential to balance optimism with a realistic assessment of the risks and potential changes in the crypto landscape. In the latest video from the Modern Investor, Bitcoin reserves on exchanges have plummeted to a 6-year low, signaling increased institutional accumulation. Companies like MicroStrategy continue to amass Bitcoin, further reducing the available supply. Binance is now advising governments on crypto regulation and national digital asset reserves, marking a pivotal moment for the industry. Arthur Hayes predicts Bitcoin's price will surge past $110,000 and potentially reach $200,000. New Hampshire's House Bill 302, enabling the state to invest in Bitcoin and precious metals, has advanced. This news comes as Bitcoin's price hovers around $90,000, with year-end predictions targeting $250,000. The decreasing Bitcoin supply on exchanges, coupled with growing institutional interest, paints a bullish picture for the cryptocurrency's future. While Hayes' price predictions might seem optimistic, the current market dynamics suggest they're not entirely outlandish. However, the regulatory landscape remains uncertain, and the slower-than-expected progress of bills like HB 302 could introduce some volatility. It's crucial for investors to stay informed and consider both the potential upsides and the inherent risks in this evolving market.